All right, I'm back and got myself a little bottle of water there. So now what's cool is that we actually have remember we're short from wave 9 on the long-term chart. Now we've got we've got a trade here, which is the first cycle high after dad turns down on the short-term chart. So that is in the direction of the trade we're already in. So a couple things you can do there. Number one, if you missed the first trade, or the last trade there, then you can enter on this trade. Another one, we're already out of we've already taken 2 exits, I should say. So if you wanted to, you could add some more contracts back in here and manage your trade that way. And that also, by the way, here's our first support level here is that blue line, which is the previous low. And it is also, guess what, mid-pivot. So I'd lock in some profits right there. See how I take profits pretty fast, right? Yeah, you notice that. That's right, I do. Because, well, it's just served me very, very well over the years when the trade doesn't work out well because we get these first half cycles pretty darn consistently. Not really even looking to make money on those. I'm just looking to reduce my risk in the trade overall. So my initial risk is small, but I like to just be very risk averse, and this is all professional traders are really that way. Focus more on risk management than on indicators, moving averages, price patterns, all that kind of stuff. Risk management, money management, that's what rules the day. And just understand that the big winners don't come along that often, so we take the little stuff here when we can get it, and then when the big stuff comes infrequently, then we're there for it. That's basically it. You got to be there. When I was in Chicago, that's one of the things I learned there, which surprised me basically at the time. I was actually surprised they were taking all these trades, and most of them were not really big winners or big losers. They were all kind of break-even, small winners, small losers. That was the vast majority of the floor traders' trades. And they just said, well, they actually had a saying. They called it a scratch is a win. A scratch is a win. And I said, what do you mean a scratch is a win? A scratch, by the way, is a trade that doesn't make any money. You don't make any money, you don't lose any money, you just kind of break even roughly. So you don't take that literally to the penny. You might, make or lose, well, depends on how many contracts you're saying, but just say make or lose a little bit. So if you're trading these time frames, maybe you make a couple ticks, you lose a couple ticks at the end, net at the end of the trade. That's just kind of, we consider that a scratch. So most trades are scratches like that, but you got to be there because you never know the long-term move of the market. Like we said in one of the previous episodes here, that you can not predict, but have a higher probability of identifying a short-term move than a long-term move. And knowing that, but we just got to take all these little trades to get us into the long-term move. So, because otherwise, you don't know ahead of time, so you just take them. But they still have to be high probability short-term trades. So the old thing, and this violates, I know, the old thing of saying, you'll hear people say, well, I won't take a trade unless it has a 4-to-1 reward to risk ratio. Okay, that's bull crap. Nobody knows ahead of time what the reward to risk ratio is going to be of a trade before you get into it. And you don't even know the potential reward to risk ratio really. So that all is hogwash, humbug, shenanigans. Yep. Another heresy from Barry Burns at TopDogTrading.com. You're welcome. Okay, so anyway, we're at the 50 MA here in the long term. We're at the 200 MA on the short term. So not a bad place to take in some profits, but I got to tell you, I'm not seeing this market turning down here. So still our energy is down for the big picture. In fact, now, if you'll notice, that first cycle high after dad turned down on the short-term chart, that was also a first retrace in the trend. So it was a concurrent trade setup. Alrighty, so we're still in a trend reversal trade on the long term. So again, the big picture, the direction of the dominant energy, all that kind of stuff is still to the downside. Again, yes, we're getting a little up move here. So what? We expect it. It's normal. That's actually why, by the way, I take profits into support and resistance, because when we get into support resistance like this, I expect it's going to pop up a little bit. Well, I don't want to give back those profits on my targets. So I just lock in some profits right there. If it happens to slice right through that support resistance level, okay, that's cool. You never know. But we're just doing a little retrace here. We're still in a, the 50 or the MOM on the long-term chart is still down. Yeah, we do have a mini divergence on the longer-term chart, at least forming. But again, it's not in line with the other energies. So short-term cycle is down, and our cycles are out of sync. So again, second chance pattern, mini divergence, whatever you want to call it, doesn't mean anything in isolation, doesn't mean anything by itself. We're not going to, in fact, if you look at the short-term chart, the last two cycle lows, we both had second chance patterns there. And they were indeed cycle lows. They did correctly identify cycle lows. They did their job. They were right. But you wouldn't want to trade them because the market hardly went up at all. So the cycle indicator just measures timing. It doesn't measure distance. It doesn't measure momentum. How far is the market going to move? In fact, this is a weird thing, but if you want to check out my advanced course, in my advanced course I actually teach you what we call inverse cycles. And to really mess with your mind, you can get, and this is, I don't even teach this outside the advanced course because this messes with people's brain cells really bad. But you can get what looks like a cycle low, which is really a cycle high. And that's what's called an inverse cycle. What it really comes down to is not only does the cycle indicator not measure momentum, how far the market's going to move, it doesn't even really identify direction. Now, most of the time it happens to, but it's really about timing. When you get down to the nitty-gritty of it, it's all about the timing of the market and nothing else. So don't worry about that, because those are rare exceptions that you get those inverse cycles. They don't happen very often, but every once in a while someone will point one out to me and I'll say, well, yep, that's right, and it is in the advanced course, and they're actually pretty cool, but they're infrequent. Okay, so I don't know what to say here. We're just still plowing down, going down. Notice on the 50 MA at the 600 tick chart, the long-term chart, we got support there. We put in one green bar, and then it went down. Again, it just pauses, didn't really bounce off support. It just paused at support. And that's important to know that at support resistance, the market could do three things. It can either bounce up off of it. Let's use support as an example. It can either bounce up off of support. It can slice through support, not even notice it's there, not even acknowledge its existence, or it can pause at support and then continue to go down. And that's what it did there at the 50 MA. So again, don't get caught up in the little movements of the market. People freak out about that stuff, especially when you're in a trade and your money's on the line. That's when people get all emotional about it. Nope, just hang in there. By the way, kind of interesting on the short-term chart, got to notice this little stuff. Again, dollars are in the details. Notice that the 50 MA did go flat at the last cycle high. And that's why you're seeing a new red number 1 down there at this current cycle low, is because the 50 MA went flat, therefore indicating that it wasn't a strong enough directional move over 50 bars to indicate a confirmed long-term trend. So everything's still down. All the energies are still down here. Also notice here, I'll just say this. So we probably put in a cycle low. Not sure yet. It's not confirmed on the short-term chart. We'll have to see. Got to wait for D to close above 45 to confirm that. But at least right now, this sideways movement on the short-term chart with all these bars side by side by side by side, that's a bearish pattern. That's a bearish pattern. That is not a bullish pattern. The fact that the market is just, again, it's hesitation. It's hesitation. The market's just pausing here. If it wanted to go up, it would go up. The fact that it's pausing and going sideways is actually bearish because we're already in a dominant bearish direction. Okay, so that cycle low is now confirmed. And the only concern I do have here is that we are in a 5-wave momentum pattern to the downside. But we often get, so that is extended momentum to the downside, but we often get another lower low on price before we, after we put in a momentum trend like that. So we'll see. Market is slowing down here a little bit, but that's because of the pause. Oh, we're out of time. Okay, so let's stop here and we'll come back and start recording again here.